Good afternoon to all our viewers. You're watching Countdown right here on Bloomberg Quint. It's a soft afternoon. The markets are trading subtle, down by about 0.2%. Not too much in terms of deep gashes, but the Nifty Bank seems to be under a lot of pressure. Let's take a quick look at the headlines for the hour. It's a lackluster day of trade for the markets. The Nifty trades around the 11,350 mark. FMCG and pharma are the only sectoral gainers. Trading hours will not be extended on the 1st of October. The market regulator SEBI has put the decision on hold owing to lack of consensus. And Bank of Baroda falls the most in nearly a decade after the government plans to merge it with two other state-owned lenders, Vijaya Bank and Dena Bank. And the Nifty PSU Banking Index is the top sectoral loser. The index has fallen the most in 8 months, with all its constituents trading in the red. But let's take a look at what's driving the index this afternoon. Neeraj, good afternoon.
Hey, good afternoon, Devina. So, actually, the Nifty Bank is probably pulling the index back and negating all the gains that come into the consumer names, to be honest. Bring up the index first. Nifty Bank is down about 0.7%, and that is having its impact on the Nifty 52. A bit of a drag there. Just a quick check at the mid caps and the small caps and see what they are doing, and then a quick check as to what the European markets are doing as well, because the salvos from both the US and the Chinese side have been fired. It shouldn't augur too well for the markets, but no alarm bells as yet. In fact, Europe is trading with a fair bit of green. FTSE's got its different share of problems, but CAC and DAX and peripheral to Europe, I believe, is doing reasonably okay. But banks, and predominantly dragged down by PSU banks, have a problem today. However, let me look at the large caps and then we'll bring you up to speed with everything else as well. The heat map should come up on your screen. It's still okay on the Nifty market, Brett, but look at the cuts that have come into firstly an SBI, and frankly, I'm sure they will talk about a lot of others as well. The PSU banking, a clutch of them have come off. Export-oriented stocks, exposed stocks, commodity names, the likes of Hindalco, Vedanta, and some of the others have come off. Remember, commodities came off in trade yesterday after Donald Trump's comments, and now today after Chinese comments as well. So shouldn't surprise too many people. Tata Motors down about 2.5% because of the JLR decision to cut down on, rather shut operations at one of the plants out there. And all of this is negating the kind of gains that is coming to consumption names. HUL up 3.5%, Titan about 1.5% as well. So good going there. Amongst the other heavyweights, ONGC is doing okay, and HDFC Bank and Reliance marginally in the green, so that's giving a little bit of support to the markets. But what about the broader markets, Devina? Well,
broader markets are primarily driven by banks and PSU banks at that. So looking at the three key names which are in the news today, that is the Bank of Baroda, Vijaya Bank and Dena Bank. So you've got heavy cuts coming in a BOB, exaggerated from morning's trade of 10%, now down to about 16%. Vijaya Bank in morning's trade from there as well, dipping more than 7%. Dena Bank, on the other hand, being a beneficiary here, seems to have gained about 20%. Other banks cheering this particular news also have seen gains of about 4% for UCO Bank, Corporation Bank, IOB, but it's a split. So you have a few doing well, while the others like a Canara Bank, Indian Bank, these are some names which probably have seen a miss in today's session. Mid-cap buzzers, stock like Amar Raja Battery, they are gaining on the back of volumes, 1.3% for Amar Raja. Biocon is doing well at 680 odd. The stock's up 3.5%, and Page Industries continues its good performance. Losers in trade, you have the entire ADAG group stocks which have seen a dip in today's session. You had the Reliance Infra, AGM, Anlamani coming out and saying they are looking at increasing the order book to 50,000 crores from the current 30,000 crores for Reliance Infra. Stocks down 4.5%, and so is Reliance Power and Arcom, which is beaten down by about 8 odd %. Other than that, volume buzzers from the sugar space. You have a Bajaj Hindustan, which once again, fourth straight day of gains coming in there, about 10% higher and about 7 crore shares traded. So it's a really big volume day for Bajaj Hindustan. MMTC and Avanti Feeds also are two stocks which are buzzing on the back of good volume gains as well as pricing activity. But what's happening in the futures and options space? Darshan is here with us. Darshan, good afternoon.
Good afternoon, Devina. We are seeing short positions that are being built on the Nifty and the Bank Nifty. Let's pull up and see what exactly is happening in terms of the open interest build up. So fresh shorts, open interest build up on the Nifty. Open interest is up almost 2.5%. On the Nifty Bank, let's see what exactly is happening, and that's 25% open interest build up. On the short side, the index is down almost 200 points at this point of time. As far as open interest build-up is concerned, what we're seeing is call writers are becoming much more aggressive from 11,500 right up to levels of 11,800. 11,800. No doubt put writers are still active at 11,500, 11,400, but they will have to cut positions as the market moves or the market becomes weaker. If you see in today's trade, open call writers will have been active, and put writers at 11,500 have shed positions in open interest. What is surprising is that despite the Nifty being below the 11,400 mark in trade, there is put writing that is seen on the 11,400 mark. Call writers very aggressive at 11,400 and 500. So if the market continues this slide, the slide lower will be much faster for the Nifty. As far as the stocks are concerned, Indian Bank is the one which is seeing fresh shorts on open interest build up of 70% currently. It's been dominated by the banks. Canara Bank again 44% open interest on the short side. Bank of Baroda 30% open interest on the short side. So these are the larger good performing banks which are falling on the anticipation of a merger. Biocon trading close to record highs, open interest build up of 9% on the long side. You have Yes Bank which is trading higher on very low open interest build up. And the last stock that I want to point out clearly that is HUL, consumption play. HUL, Jubilant Food, both of them are moving on decent open interest build up today.
All right, Darshan, thanks very much for that. That's the futures and options snapshot in trade today. Well, we're going to divert attention from the markets, and obviously one key proponent of the market and what the equity investors watch out for is what's been happening in crude and the price fluctuations over the last few days. Oil prices continue to remain at elevated levels in recent times. This despite Saudi Arabia intending to fill in the output gaps caused by issues in Iran and Venezuela. In a situation like this, OPEC and non-OPEC partners are set to meet in Algeria this week to discuss all possible production scenarios. Is there a production hike on the cards, or will the market see more supply going ahead? Let's pose these questions to Azlin Ahmed, who's joining us right now from Argus Media. Azlin, thanks very much for speaking with us. First up, what is expected out of this meeting?
Well, I think that for this meeting, I think we have to realize what it actually is, because the OPEC Secretary General, Muhammad Al has stressed that this meeting is not a decision-making meeting. He says that decision-making power will still lie with the conferences of ministers that is set for early December. So this meeting in Algiers is just of the Joint Ministerial Committee Monitoring Committee, which basically just supervises the production. And the aim is to have some sort of mechanism to assess the conformity with the output cut agreement and just to see what they can do to stabilize the market. So we're not expecting any major decisions from this meeting, and I think it will be just several proposals put forward, and then they will see how they can cooperate. But we don't expect that this is a major decision-making meeting.
Aslan, but in light of that, is there any aspect with regards to the supply stability that could be discussed once the Iran sanctions come on board, and just in order to probably put a lid on the kind of volatility we've been seeing on the demand and supply side?
No, I don't think the volatility will ease even if the sanctions are imposed, because in the June meeting, I think that OPEC and the main non-OPEC producers led by Russia agreed that they would increase production, and they would, and they've already done that. I mean, Russia has already started to increase production. Saudi Arabia has already assured the market that they can produce more. So in that sense, it's not going to be. They will supply as the market needs. I think right now, because of the fact the market volatility is because ahead of the 5th November implementation of the U.S. sanctions on Iran, the uncertainty is whether the U.S. expects absolute zero in Iran exports, or whether they will be a little bit more flexible and allow give some countries some waivers to import Iranian crude at reduced volumes. So right now, there has been no indications from the U.S. on which side they're going to be. So I think that is creating the volatility in the market. and that will probably continue until the U.S. really makes it very clear what their stance is. We must also remember that in 2012, when the sanctions were first imposed on Iran, the U.S. gave waivers to 7 countries, allowing them to import Iranian crude at reduced volumes, but they gave these at the very last minute. So we could see that again this time. So which is why the market is very uncertain, because there's no clarity about how much of a drop the Iranian exports will be by November.
Just, from a perspective of someone who's watching crude oil prices, which is important from every aspect in terms of macroeconomic data points as well that come out, from within the country. Where exactly are analysts viewing crude oil prices to settle at going forward? Is there an expectation of prices to harden further from these levels, probably move past 80, 85?
I think that right now, with the ICE Brent, it did try to reach $80, and it didn't really go beyond. So I think that at this point right now, the market probably will hover around where the current levels. I mean, anywhere between like around 75 to around maybe 80, because it's just based on the current market fundamentals, because the market is a little bit tight, but there is a prospect of increased production from the U.S. So I think that at this point, the market does not expect prices to shoot higher. But having said that, by November 5th, if the U.S. insists on absolute zero in Iran exports, I think that there is the potential for prices to go higher.
All right. Aslan, we leave it at that. Thanks very much for joining us. But obviously, like she highlighted, this meeting is not to take decisions. It's probably just to take stock of the current situation that's happening. That's probably weighing down on oil prices at this juncture. So currently, NYMEX WTI crude trading closer to about 70.68, with the Brent crude trading at 77.77.
Just before we get in the next story, and I just want to mark what's happening to the sugar and the allied space as well, because while the likes of Balrampur, Renuka and a few others have corrected, Praj Industries too has corrected. So this morning we were talking on the morning show about how the rallies in some of these stocks, even though the fundamental change in the business has been too sudden and too swift, we're now seeing some bit of a pullback on fairly high volumes for each of these names. And interestingly, even in the PSU banking space, I think some of the stocks have come off. So it's not that all PSU banks are up and about. Indian Bank is down about 8%, Union Bank is down about 8%, Canara Bank down about 6%, Syndicate Bank about 5.5%. So in the morning, I think the market was painting the entire space with the same brush. There, the bifurcation now starting to happen. Very few PSU banks holding up. The SBIs and the BOBs are down, but even some of the other ones are down. I think the ones that are doing, or at least were doing the last time I checked, reasonably okay were Dena Bank and Vijaya Bank. But aside of that, serious pressure. Look at the volumes they've been on Bank of Baroda. That's 102 million shares traded on BOB in a single session. That's quite a surge in the volumes. The AVAT function will also show that surge, but 112 million shares traded. That's way higher than what you would normally see on a BOB.
Well, the pricing action warrants it. So, I mean, the market has not taken the news of this merger, at least for Bank of Baroda, which is the seemingly larger and the stronger bank in the mix here. The disappointment is there and the uncertainty as to what will, unfold from here in terms of, business prospects and financials and how the balance sheet looks post the completion of this merger. Because remember, at the time that SBI and its associates merged, SBI actually took quite a big hit in terms of its profitability for that entire year. So, don't know whether that probably is a little bit, of a trigger or uncertainty which the market is feeding into right now as to what is the prospect for Bank of Baroda here, because they seem to be on a stronger foothold and, maybe getting saddled with Dena Bank, good lower prospects.
Yeah, we'll get to know about it from the management in moments from now. But just before we get into what is arguably the most important story of the day from yesterday, a big story from today is that trading hours will not be extended from the 1st of October. The market regulator has put the plan on hold after brokers and stock exchanges failed to arrive at a consensus, according to sources, of course. Sajid Mangat joins us now with the details. Sajid, it'll bring a smile to a lot of people's faces, but that notwithstanding, what are your sources telling you?
So, what we understand is that the regulator is not going to insist on extended trading hours from October 1st. The exact time and date would be communicated later on because the regulator feels there is no consensus on the kind of products that should come in from October 1st onwards. But having said that, the brokers and the brokers community is opposing any extension because they don't see any incremental value or revenues coming in from there, though exchanges are of the opinion that trading extension will bring in incremental value and revenues for both brokerages, because come October 1st you will have universal exchanges where commodities in any case would be trading till late hours, and stock exchanges are also entering into commodities with both BSE and NSE having made the announcement that they are looking at multiple non-agri commodity there. So the exchanges in any case are going to be working there. The infrastructure for that is set up because the clearing corporations and for all exchanges are there, and the regulations going up to October 1st, which is linking of all the clearing corporations or interoperability of clearing corporations, all will come in and fall in place. Having said that, SEBI wants to have a consensus before going forward because there's too much of a back and forth which is coming in from the brokers and so SEBI said that okay, let's get into consensus and before we decide on a date. So it's not on hold or it's not on a back burner, but the date has been pushed. Hopefully the consensus should be there in some time, and maybe whether they go for a graded version of going up to 11:55 or in one go they would go. That's something which the consensus has to decide.
So it's not a question of whether this is happening or not, it's a question of when.
Yeah, it's a question of when it's going to happen.
So any indication when the next meet is supposed to be? Or
so there are two things here. One, NSE is pushing for derivatives. BSE, which doesn't have much of derivatives, is pushing for cash. So we have permission till doing for cash up to 5 p.m. This is one of the existing SEBI circulars which have allowed from 9 to 5 p.m. thing. So it could be a possibility that in the first phase you go up to 5 and then again look at a trading market for derivatives going forward. But it's a question of all exchanges coming together and taking a call along with brokers.
Okay, Sajid, thanks for putting that into perspective. So not a question of whether it will happen or no, but more a question of when. We'll get to know about it in a few weeks, I would presume. The big story of the day, and that's BOB. Well, we all know the story. Let's get in Chadha Babla really to talk about the reactions and what did brokerages make of this. And Chadha, seems to be a telling difference in the way the market has treated some PSU names versus the others.
Absolutely, Neeraj. So overall, analysts and brokerages had expected the stocks, the stock of Bank of Baroda, which is the larger, stronger PSU bank, to react negatively because it will be absorbing a stronger Vijaya Bank, but a much weaker PSU bank, that is Dena Bank. But largely, the merger is not expected to dilute the asset quality or capital parameters as far as Bank of Baroda is concerned, but analysts did see the big risk in the cleanup of bank balance sheet if that does happen post M&A, like we saw in the case of SBI. So that's probably something which is also spooking stocks, at least in the near term. CLSA has said that assuming a share swap ratio being in line with the current market prices, Bank of Baroda would be acquiring these banks at a discount to its own valuation, which is a good thing. JP Morgan has said that overall this is an incremental positive for the PSU banking space itself in general. They've said that PNB, BOI and Canada are possible aggregators, and they also see the possibility of SBI being roped in for the second round of the merger. UBS has said that the big overhang of the worst combination is behind for Bank of Baroda, and they do not see any major impact over the medium term, so they've maintained their buy rating with a price target of 220. Citi has cited people-related issues as the most significant challenge to the merger. IDFC has said that the merger is an added negative for Bank of Baroda, largely on account of the integration issues and the higher NPLs that we could see post the merger, that was highlighted by some of the other brokerages. So they have downgraded the stock from outperform to neutral and cut the target price to 130. Phillip Capital has done some scenario analysis where, according to them, the impact of the merger on Bank of Baroda's adjusted book on an average should be as much as 20%, and they believe that the turnaround story of Bank of Baroda will now take a backstage. So the turnaround and the ROE improvement could be put on the back burner, and the focus will shift to integration. And they also expected the merger to have a negative impact on some of the other stronger PSU banks like Indian banks. So clearly, all these stocks are reacting in the expected fashion as well. Bank of Baroda seeing 15% cut, and Dena Bank locked at the 20% upper circuit.
All right, Chadha, thanks very much for putting that into perspective. Let's actually get into the management perspective now. We've been joined by Mr. P.S. Jayakumar. He's the MD and CEO of Bank of Baroda. So thanks very much for taking out the time. The market doesn't seem to have taken this amalgamation very positively for Bank of Baroda, saying that probably this could be a slight bit of a raw deal for you in terms of the other counterparties in this merger. What's your take?
Well, I think there are a couple of things over here. One is that most analysts, on the other hand, agree that the long-term outlook is very positive. So the issue is with respect to short-term, the question whether Bank of Baroda management will get distracted to the point that the existing business direction will be lost. That's one aspect of the question. The second aspect is about hidden losses, if any, living inside Dena Bank, that impairs the capital of the combined company and therefore by definition the growth. These are the two broader issues that are there. A third longer term issue is whether synergies can actually emerge in the PSU sector. So now let's deal with the first set of issue. I think the way any merger is conducted or amalgamation or whatever the terminology we use is that it's a set of dedicated teams that works around the issue of taking the process relating to the merger forward. But the rest of the people, maybe 54,000 staff, for example, will continue to focus on the business as usual. So I think therefore this worry that is have in a way is reasonable. But all I can say is that it's probably a bit exaggerated in that there is a process in place for the continuation and growth of the normal business. That's number one. As far as the second aspect relating to Dena Bank is concerned, what I have is information that is available in the public domain, and the fact is, for a variety of reasons that we have seen over the last 1 year, all institutions have recognized NPA more comprehensively, and provisions that have been taken have been fairly conservative. I mean, I wouldn't say conservatively, but the IRAC norm. As a consequence, my underlying belief is unless some new NPA problems arises, the net position should be reasonably close to what is there. Now, let's assume that is not the case. The government has already made it very clear that if further capital injection is required, then that amount will be available. Obviously, a business case has to be made to justify any capital infusion anywhere in any system. So that's where we are at this point of time. So all I can say is that our objective would be to ensure the regular business of the bank does not get disturbed and that we have operating mechanism in place by which we segregate attention with respect to the running of the business on a day-to-day basis and the process that will lead to consolidation.
Right. So one other thing that comes up is that this move aimed to probably address the capital requirements for some of these banks. Do you think that has been addressed, or there is that need of further additional capital, which the government will any which ways have to fill in?
Well, if you look at ourselves pre-merger, our capital adequacy ratio was in the region of about 9.25%. Now, we were projecting a net income this year post-tax of about 2,500 crores, so thereabout. we are growing by 20%. So at some point of time, we need to take additional capital from the market, for which we took appropriate resolution. Now, the issue is that because of the merger, it is possible that the markets may not be receptive or the prices may not be receptive to raise further capital, in which case the government has agreed to, has indicated that they would be willing to step in. But it's not an immediate next quarter requirement or even a requirement till March of 19. The current level of capital that we have got is adequate to take us through. So do we require capital? Yes. Do we need it tomorrow morning? No. Is there sufficient time to raise capital? Yes. Is there a backstop commitment from the government? Yes, there is.
Interesting. Mr. Jayakumar, good afternoon. The one comment that also came in across houses was that that is BOB's NPL recognition policies much stricter than the others, and when the merged entity comes out with its first quarter numbers or second quarter numbers, because of the recognition that will have to happen for the others' books, the quantum of NPLs would rise and rise quite substantially. What would your thoughts be on this?
I think we are kind of looking at two different issues. As far as the provision, as far as recognition of an account to be an NPA is concerned, I don't think there are any different view that Bank of Baroda is. I mean, we all follow a similar set of rules. The issue is with respect to provision. So yes, if there is a convergence of provision, I do not know what the material impact is. It's one of the things that we will be doing as we go through the integration process, and we have to quantify, if any, there is any difference, and if so, what that amount is. But I do think that the right thing to do would be that we continue to keep Bank of Baroda and the combined entity continue to keep the benchmark set by Bank of Baroda with respect to provision recognition. So, as a consequence, if additional provisions have to be taken, they need not wait for the 31st of the next fiscal year. They should be taken as and when the next financial results are declared, or during the course of the remaining period leading to pre-merger, relating to the merger. So that's what I think it is. I don't have an idea about what it is. I don't think at this point of time we need to, look at some worst case scenario as a consequence of that. Let's get down to it, and we all have to rely on the assurance of the government that if capital is required, they will provide it.
Interesting. One small question again on this, the last M&A that happened with the SBI and the subsidiaries, I think the ratios were based on the stock prices as of the day before. Now, because the government would want to use this as an example of sorts, the first merger that is being done between you and the other two, would you presume that that would be the modus operandi that would be followed as well?
I would think. I would think. I mean, there is a set process for determining the swap ratio. There is one set of guidelines on one hand, and the other hand, there is an accounting profession independently that values the swap ratio, and then there is a process for that to get approved by the respective board, and then in the scheme of consolidation. So I'll wait for that to happen rather than jumping the gun at this point of time. But if your issue is that if you're implying that between pre-merger and post-merger, pre-merger announcement and post-merger announcement, there could be one set of scenario that is good for Bank of Baroda, another set of scenario that may not be good. I think we have to do what is right in terms of evaluating the intrinsic net worth of these organizations and deciding on the stock swap ratio. But I don't think I can comment any more than to say that let's get this board resolution, let the boards approve, let the process take shape, and then we'll have a sense on where the swap ratio will head towards. But clearly closing out on the stock swap ratio as early as possible will be one of the objectives.
So I'm just trying to understand what are the immediate merger synergies that you see, or rather is it more of a scope of rationalization of costs and efficiencies? But again, the FM yesterday had assured that the interests of all bank employees would be taken care of. Then what would be the source of these efficiency benefits that could come in?
Well, I will tell you this way, that even if you look at Bank of Baroda's customer base and look at the number of products per customer and those kinds of metrics, we lag many of the best-in-class banks. So merger or no merger, we have to do a lot of work in terms of improving cross-sell ratios to our customers, right? That's a given. Now, for that purposes, we have made investments in technology, in analytics tools, etc. And as we roll them out, we're beginning to see some good results. Now, whatever infrastructure that we have built would be equally available for the other two banks, assuming they do not have some similar infrastructure in place. Therefore, my position is that it is going to be an opportunity for all the three banks to leverage from each other's strength and move forward. And that would be the logical way of handling the matter. So I do think at least the revenue side, we should see some benefit coming in, you taking some of the successful use case in each of these institutions and then transferring successes across. Those are the role any management should do, and we'll have to focus on that. So that really is what it is. As far as the cost synergies, etc. are concerned, they are a second step synergy. They have to be impacted post the merger being taking place. Now, as far as the employee issues are concerned, I think in my view, we are generally less staffed. And it's also because the retirement levels are quite high, nothing to do with the individual bank, but it just happens to be the structure of the industry. So within all of these things, I don't think there should be any concern for employees. On the other hand, there are going to be more opportunities in terms of either locational preferences or overseas exposures for some of the other two banks which do not have branches outside. And, an ability to handle a much larger franchise and size scale balance sheet for the emerging leaders. So in all, it should work out favorable. I think the employee dimension, employees should not be worried, and I think there is sufficient opportunity for everybody to grow.
So when is your next board meeting on to take the merger proposal forward, and how long do you think this merger will take to complete?
Now, we are coordinating the dates with the various directors. We shall shortly, there's a 2 days notice period that we have to give to SEBI before the board meeting. I expect we will do it sometime next week, though I'm not 100% certain of the date. Now, as far as the process is concerned, we can only explain it in terms of range. It's not possible to say it will take this day or that day. But I think between 4 to 6 months, I would expect that we should be able to complete the process.
So just one last question before we let you go, and thank you for being so patient with us. Any indication of what the management structure would look like post this amalgamation? And second, obviously it's a non-related question, but the second is that obviously now your regional presence because of the amalgamation with Dena and Vijaya Bank will increase substantially. Any state-wise significant uptick that you see because of this amalgamation, and if you have the numbers to support that?
Okay, so let me come to the second part of the question. The nice thing about this particular sequence, this particular merger, this combination, is that we are going to see increase in the number of branches on a consolidated basis in the markets we want to grow. So, for example, if you were to take the state of Maharashtra, for example, as of now, Bank of Baroda has 550 branches. Post-merger, it will be 1,000, a little bit more than 1,000. If I were to take Baroda, for example, we are probably in the 1,007 number. That combined entity will be about 1,744. If you were to look at locations like Andhra Pradesh or Telangana or Tamil Nadu or Karnataka, for example, we are not well represented as Bank of Baroda. On the other hand, Vijaya Bank has a good presence. So in those markets, for example, for Karnataka, if I were to take it, the combined branch, if I remember, is around 766 branches to Bank of Baroda's current position of 161. So given all of these things, I think there is a significant growth in the distribution. The combined distribution is larger, more geographically distributed, and weighed in favor of locations, which are the locations or the regions that these other three banks would like to concentrate upon. So I think that is definitively possible. The second thing is the set of product sets that Bank of Baroda has got, particularly its presence in overseas location, can be brought to play for the benefit of the customers of the other two banks. In addition to it, many of the platforms we have invested, and these platforms were invested in part to create a scalable architecture, both organic and inorganic growth, would be of help, increases the level of preparedness. Just to give you an example, we have a well-developed business processing unit in Gift City, which is a very scalable architecture. Now we can bring that to play. So in other words, this issue of growth in the scale of business, whether organic or inorganic, is anticipated, and accordingly we've been trying to work on structures through which we can go through this, build up the scale in an efficient manner. So in some sense, not entirely, not wholly, but in some sense we are kind of already structured or wired to be able to scale substantially. So all of these things are positive factors which are not probably recognized at this point of time by a section of the market. So I think if we can put all of these plans that we had and all the investments we have made so far and the scaling capability of built into full play, there is no particular reason as to why the whole process can be handled, in a very smooth and what can I call a non-frictionless manner.
Right, Mr. Jayakumar, thanks very much for joining us. Really appreciate you, spending this time and explaining things to us for the benefit of our viewers as well. So the management seems pretty clear, that this is a long-term positive for the amalgamated entity on all fronts. Yes, initially at the start you will feel a little bit of a pressure on the balance sheet. They will have to upfront those NPLs that come in from the other two. But aside from that, it seems to be all positive for them.
Yeah, the market somehow doesn't quite like this. It's showing on the Bank of Baroda stock, showing on SBI and some of the other stocks as well. So interesting movements there. Let's see if PS Jayakumar's confidence rubs off over the medium term. For now, though, under pressure. Let's talk about all of that with our experts. Amar Singh of Angel Broking joins us right now on the show with his thoughts on the charts, as does Sacchitanand Uttekar of Tradebulls. Gentlemen, both of you, good afternoon. Thanks so much for joining in. We're on the topic of some of those PSU banks. If I can jump straight to that. The Nifty Bank, Sacchitanand, down about 1%, led predominantly by the PSU banks. How are the charts looking there?
Well, good afternoon, Neeraj. In fact, the way we are looking at the market right now is, especially the Nifty Bank is, lingering near its support, which was created on Wednesday's trading session. 26,550, looks like a sacrosanct support, and until unless we don't see a substantial breach of that particular support, we may see, some cool off in the selling pressure, and we may see a, rebound back to say 26,900, 27,000 levels back. So I think, one should really not create any fresh short positions as of now and wait it out for this particular tide to change. So if you look at some of the components of Bank Nifty itself, stocks like HDFC Limited, HDFC Bank, ICICI Bank, they are trading near their immediate supports. So, there is substantial evidence saying that we may not see an immediate, strong momentum on the downside, and this particular move, which has been escalating for last two trading sessions, could be absorbed, and we may see Bank Nifty, reversing its trade from here on. So from a conditional perspective, what we are recommending is buying a 26,700 call option of tomorrow's expiry. This particular option is quoting somewhere close to around 78, but it's a conditional buy above 105, keeping a stop loss at around 65, and we are expecting a strong bounce back to around 180, 185 levels. So this is a trade setup that we are looking at when we have to trade Nifty Bank from here on.
Amar, how are you approaching trade? And in fact, the Nifty 2 is right now trading at the lowest point of the day.
Yeah, overall what we are witnessing is that both Nifty and Bank Nifty, any pullback is being used as a shorting opportunity, and technically also if you look at the charts both for Nifty and Bank Nifty, clearly the short-term trend is definitely weak, and it's gaining in intensity. So looking at Bank Nifty, 12 September's low of 26,550, that's a crucial level of support, but that's likely to be tested, and that is very likely to be breached as well. Because the intensity of the fall which we've been witnessing clearly reflects that there is further selling pressure. Bank Nifty, I would say that 26,250, 270, that's a crucial zone of support for Bank Nifty, from where we could see some pullback, but again that will be used as a shorting opportunity. If that level is breached, then we could witness some serious correction in Bank Nifty. Talking about Nifty, what we see is that Nifty again is very weak on the charts, short-term perspective. The long term, I would say it is approaching again to its very crucial support zone. If we look at Nifty, so somewhere around 11,000 major support level for Nifty is around 11,200, 220. That's a crucial support, 100 and 120 points from the current level. So I would say that any pullback will be used as a shorting opportunity, and one should be very cautious on the buy side till we see some consolidation.
All right, negative view on the index by Amar. Can we run through some of your stock ideas as well? You've got a buy on Wipro and a sell on Z.
Yeah, that's correct. If you look at Wipro's among from the IT pack, that's IT pack is definitely some of the stocks are holding firm. And if I look at Wipro, technically also it's very strong on the charts. I would say today also it has pulled back from the lows and currently trading close to the highs of the day. And technically, as I say, on the weekly charts as well as the long-term charts, it continues to be extremely strong. So any pullback in Wipro towards 327, 329 zone, that can be used to initiate a long position with a stop loss of 318.7 and a target of 347 in the short term. And the second stock to look is a sell that is on Z Entertainment. What we are seeing here is that this stock did manage to pull back. If you look at technically on 6th of September, it witnessed a pullback, sharp pullback. But again, technically on the charts, be it the short term, intermediate or the long term, the trend remains extremely bearish for this stock. That's the reason any pullback will be used as a shorting opportunity. So any pullback towards 470, 472, that can be used to initiate a short position with a stop loss of 480.5 and a target of 454 on the downside. And even if we look at the OI data, what we see is that on the downside, it has got strong support coming around 450, whereas upside again seems to be capped at around 500 levels.
Sacchitanand, your ideas?
Well, we have a combination of long and short on a positional basis. In fact, if you look at HDFC Limited, the stock has been, trading close to its 200-day exponential moving average. A couple of days back, we saw bullish harami kind of a formation near this particular support zone. And again, this particular support zone is getting, reconfirmed. So what we are expecting is that there could be a sharp rebound in this particular stock in the coming weeks, and we may see levels close to around 1920 again revisited. Stop loss can be placed around 1855 and long positions can be initiated in HDFC Limited. On the short side, we are bearish on Bata India. In fact, the way the short-term averages are converging, the 520 convergence is indicating that there is substantial room on the lower side, and we may see this particular room getting opened up in the next couple of weeks. What we are expecting is that this particular stock could escalate towards 970 support levels. A stop loss can be placed around 1023 and short positions can be initiated in Bata India.
Okay. Mr. G. Chokkalingam of Economics Research and Advisory joins us on the show. Mr. Chokkalingam, good having you. Thanks for joining in. Before this announcement came in yesterday, did you have an alternate view on PSU banks, and are you the likes of BOB, for example, and are you changing that after the announcement yesterday?
Yeah, it's a very interesting question. Before this announcement, we had an aggressive buy call on Indian Bank and Vijaya Bank because these are the two PSU banks which are top of the league table in terms of asset quality and the business growth. And if you look at the net NPA, these two banks have the lowest net NPA, and the business also continues to grow in strong double digit. So now after this news, we have not changed the view, but we remain alerted because market is thinking differently. Today, if you look at the way the market has rewarded, it has rewarded the bad bank like Chadha Bank, and it has punished good quality banks like Vijaya Bank and Indian Bank. So perhaps market may be right, we may be wrong, but what market perceives is that there is going to be reward for bad bank in terms of better valuation for merger, and for good bank there will be a punishment. So I doubt whether government can follow this irrational valuation method, because banks like Dana Bank, they have eroded the net worth. They have got a negative net worth if you adjust for the outstanding net NPA. So in case they don't look at the rationale and go ahead with market price for merger, then this will be a negative for quality banks like Indian Bank, Vijaya Bank, even to some extent the Bank of Baroda. But otherwise, if they stick to the valuation on the basis of adjusted book value, then there could be a huge upside. So what I am trying to do is that I just hold on to these two stocks. So without having any clarity from the government on valuation, I do not want to react. I would rather stick to the valuations.
Good afternoon, Choka. You seem to be liking IT, and you've got that flavor on your list. Two actually, Cyient and Datamatics.
Yeah, definitely. We have been very lucky. We made a good amount of profit in many mid-sized IT companies. And after tracking many, I found a lot of valuation comfort in Datamatics and Cyient. Datamatics, if you look at the enterprise value to sales, it is just 0.9 times. Even in this morning, we saw in the media some of these back office IT companies are valued at more than 2.5 times to sales. Even in the listed space, there are many companies which are trading at 2 to 3 times enterprise value to sales. Even in terms of PE, many companies are trading at around 15 to 20, whereas this company, Datamatics, trades are at, for the current year in a single-digit PE of around 9. And the stock also corrected from the peak, and also it has got 450 MNCs as clients. Many of them are Fortune 500 companies. The business model also gives a lot of comfort, and also rupee depreciation gives me a lot of comfort. So therefore, I firmly believe that Datamatics can give a target price of 190. Similar argument for Cyient. Among comparable companies like Mindtree, Emphasis, this is one of the cheapest mid-sized IT companies in terms of EV to sales or PE method. So therefore, I remain bullish on Cyient. And fortunately, in the last 5 trading days itself, Cyient has corrected about 100 rupees. So I take this as a great opportunity to accumulate.
Okay. And why do you like Andhra Sugar?
Yeah, it's a phenomenal stock. I've been tracking for more than 25 years. We made a lot of wealth in the past, and I firmly believe that once again we will make wealth. The name is a misnomer. Actually, 100% of the profits are coming from the chemical businesses. And more than a year ago, it shut down the largest sugar plant because I believe that plant is in the midst of a town in Andhra. So there's a lot of unlocking potential in terms of real estate. So that was the largest sugar plant. Now they've got 2 small sugar mills. But if you see, even in a normal time when sugar industry made profits, the caustic soda and other industrial chemical business of Andhra Sugar made a majority profit contribution. Now it is almost 100% coming from chemical business. Very interestingly, this company is more than 50-year-old and giving consistent dividend for last 5 decades without any interruption. It did not have any interruption from the labor front also. It's very investor friendly. Now for the first time in the last 50 years, or rather last 25 years since when I have been tracking, the company has gone for aggressive expansion. All the expansions are in the chemical space. They have expanded caustic soda business. They have expanded aspirin capacity to 2000 TPA, and they have set up a few new plants for using the in-house chlorine output. And also it's a very rich investment company. It has got a subsidiary called Josil. Its joint venture company is Andhra Petro. That stock itself has gone up by more than 200-300%, and also it pays a very good dividend. Despite a huge loss in sugar, it made a very good profit. I am expecting around 60 rupee EPS for next year, and I firmly believe that at some point in time, the reality of the company would be realized by the stock market that this is no longer a sugar company, it's a chemical company. So therefore, even if I give a 15 PE, it can become a multi-bagger. So therefore, I have recommended. Personally, also, I have invested in Andhra Sugar.
Okay, so those are a few stocks from Chokka stable, Cyient, Datamatics, and Andhra Sugar. Should pull up an HUL because I believe that stock's just been going from strength to strength in intraday trade. At the highest point of the day right now, 3.5% plus on the counter at 1664. The stock had seen a recent correction, valuations have come off, and looks like this is tempting investors to once again enter into the counter. Quick technical call on this one, Amar?
Yeah, looking at HUL, what we're seeing is that the stock had corrected from almost 1800 levels and then was consolidating around 1560, 1570 levels, and it seems that the stock is, and that's a major long-term support level for the stock. So the stock seems to be on the upside move, but it needs to consistently trade above or close above 1580, 1585 levels. And then you could say that the trend definitely, short-term trend has changed. As far as the long-term trends are concerned, they are extremely bullish for this stock. So yes, any dip should be used as a buying opportunity, and this was a major support level. That's the reason we are seeing this pullback in this stock.
In fact, most of the FMCG counters have seen a valuation correction on the downside. HUL, just a month back, probably in the first week of August, was trading with P multiple of about 60.5 odd. And off late, it's come down to about 55. I'm talking about the FY19 estimates. So, that's probably, it's 6.5%, almost 7% lower in the last 1 month. We've seen that little bit of a dip coming in. One stock, however, which has actually seen the reverse of this and an expansion in P within the same space with pricing action on the upside, has been the likes of a Dabur, which has probably performed divergent to what the rest of the FMCG pack has done. This is the intraday move. It's still up 1%, 1.6% in today's trade, but the last 1 month performance of Dabur also has been pretty encouraging. Anything else, Sacchitanand, if you would like to add in terms of stocks that you're tracking right now?
Well, as we discussed, what we are seeing is that most of the private sector names on the banking side are showing some signs of stability, and we are not finding much more evidence for an immediate decline. So one particular stock that we are liking is Yes Bank. If you look at the overall structure, the stock saw a substantial fall from the levels of around 405 right up to 310, and it never saw any kind of a consolidation. So after a steep fall, this is the first time wherein the stock has been oscillating within a band of around 325 on the higher side and 320, 318. It has made a decent amount of base in the last 5 trading sessions. So probably, this could be a very good candidate from a very short-term perspective. The stock is quoting somewhere close to 325 right now. I think short-term buyers on the positive side can be initiated here. 321 should be the stop loss. It could be a good BTST kind of a candidate. Once we have this the level of around 330 being ejected, I think the stock could extend its run towards say 340, 342 levels. So I think the reward to risk is very much sweeter here, and the stock has been quoting deep into its oversold zone. So I think this particular consolidation is a good sign. I think some long buyers can be initiated in Yes Bank. An immediate target of around 340 could be expected. 321 should be the stop loss on a closing basis.
Now, a stock that's done well today, nudging new highs, is Vindhya Tele, 1659. Mr. Chokkalingam, have you looked at this one?
Yeah, twice we initiated, but of course we initiated below 1,000. The last time we initiated around 1,000, and we exited the stock around 1,600 because in the last 2 months the stock has ran up from 900 to current level, more than 70% jump in a short span of 2 months. So in terms of EPS, it is fairly priced now. So therefore, I would not suggest entering at current price.
Up about 2%. I'm guessing Mr. Chokkalingam's view is clear. He's actually sold it at 1,600. So re-entering at this price is out of the question. The stock certainly doing rather well for itself. Mr. Chokkalingam, good having you. As always, thanks much for taking the time out and being with us today and giving us your thoughts. Well, that's Vindhya Tele up at the highest point of the day. HUL at the highest point of the day. Yes Bank, ONGC are amongst the other names which have done rather well for themselves. Bharat Electronics on the other side has dipped over 50% in the year thus far, but analysts still seem to have an upbeat outlook on the state-owned company. What's the rationale behind this? Let's ask Yash Upadhyay, who's pulled out an analysis for our Chart of the Day segment. Yash.
Thanks for that, Neeraj. So shares of the state-owned aerospace and defense equipment manufacturer Bharat Electronics have fallen to their lowest levels in the last 3 years, making it the cheapest defense stock in the world. It currently trades at a trailing 12-month price-to-earning multiple of about 14.5 times, with Turkey's Aselsan Electronics coming in at a close second with 15.2 times. Now, it has been a rough 1 month for the company, with the shares tanking over 25% in that period, following the Defense Ministry's ruling to reduce the margins on any new orders from the current 12.5% to 7.5%. Now, despite of the sharp down move, analysts continue to remain bullish on the counter, with 83% or 19 out of the 23 analysts tracking the stock having a buy rating on it. That is the most in percentage terms for any of the stock which is having a buy rating, and has also the highest return potential, almost 50 times, almost 50% from these current levels. Now, Citi in its report said that the new pricing measures, they would not impact their orders for the long-range surface-to-air missiles as well as the Akash missiles, as the tenders for them have already been placed, and the fact that the order is not retrospective in nature, which means that the company's current order book, which stands at over 50,000 crore rupees, stands to be immune from this order. And while brokerage firm Antique 2 is bullish on the stock, they have reduced their margin expectation as they estimate margins to fall from the current 19% to 16% because of this ruling, but they are estimating a 10% earnings CAGR over the next 5 years. Back to you.
All right, Yash, thanks very much for that. So that's the comparison of BEL versus some of the other global peers. And like Yash highlighted, the stock has seen a significant correction and a potential upside of 50% as per Bloomberg analyst poll. Stock's at 83. Let's take a quick break on that note, but as we slip into this break, here at Mr. Maheshwari of Centrum Broking and his views on the market.
There is two-pronged strategy which we are suggesting to the clients. One is obviously given that there is a macro challenge. I think people need to be a bit cognizant of the fact about the growing visibility of problems, especially on the macro front. So they need to be a bit more defensive in their outlook. So we are suggesting that you shift on to a more defensive portfolio. So we are saying that get into FMCG stocks, get into stocks which are held by the falling rupee, so IT and pharma. So, and they are by nature also more defensive than the banks and all. So I think that is one thing which we are telling. The second one we are telling is about the incremental economy getting better and better, and that we are saying that you should play it through the mid caps. Given that there is benefits of the GST which we are seeing on the ground coming through, Demon has gone behind basically, and the mid caps which had actually taken a beating because of the Demon, I think most of these things are now actually getting behind the corner, and you have seen last quarter results being very good. Again, we are expecting another good quarter around the corner. Mid caps have corrected quite a bit. So I think these two-pronged strategy is what we are suggesting people to do.
Some of the blue chip names have started seeing a bit of a pullback. I mean, we were just looking at yesterday what the HDFC family has been up to. We've seen some of the consumption names come off as well. There has been a correction, nowhere making them cheap, but a correction nevertheless, both time-wise and price-wise. Would you reckon when you're saying that over the next 6 to 9 months you will get enough and more names, quality names at a better valuation, would these companies tend to fall more? Large retail-facing private banks or some of the life insurance companies or the AMC names? Do you think that there is more correction in store?
So you've seen already most of the insurance companies are down by anywhere between 10 to 20%. HDFC Life, I think because of a change in management, whatever the news may be, I think we've seen 20% down from the top. So I think you will keep on getting these kind of changes happening basically. What you need to do is basically in the next 6 to 9 months, just keep your own price target, and I believe that most of the targets you will get it. Now specific stocks may or may not achieve that thing, but I think if you have a reasonable target in your mind, I think this volatile time of next 6 to 9 months will definitely get you your prices. But at that point basically we shouldn't panic and not buy it.
Okay, so just wondering, Nischal, the retail focused banks, and I know you can't get into a stock specific discussion, but the retail focused banks, the Kotaks, HDFCs of the world, would you reckon the price to book numbers could see some more corrective moves?
Retail focused banks once again falls into the category of consumption and falls into the category of quality stocks. So they may not correct a whole lot from here. Given that money moves in these kind of times basically into more defensive sectors, and retail, though banking is not a defensive sector, but being retail focused banks, I think they become defensive by nature, and that's why you see that they may not fall a whole lot from here, but a correction, a time correction is what I see happening in the retail focused bank rather than actually value correction.
All right, Nishal, just the flip side to that discussion on PSU banks. You know, if you see the screen and if you put up 10 of these names on your screen, it's just lit up in today's session behind, on the back of what the government has announced for a Bank of Baroda, Dena Bank and a Vijaya Bank. The point is, inherently, there's nothing that has changed. The pain points for these PSU banks still remain there, but it's just a sentimental change around this announcement that has caused these stocks to react the way they have. Do you see things changing materially for this space?
I don't see any change happening in the next 2 or 3 years, because I think government has to still find home to a lot of these PCA banks. So this kind of issues will continue to happen. Basically, you will see more mergers happening and the healthier banks being palmed off some of these PCA banks, because government has to find home and government has to find capital for these banks. So I don't see a material change happening on the PSU space. Yes, I think one thing which is happening for a long period of time is PSUs continuously losing market share, and that will continue to happen, and the gainers would be the private sector banks and the NBFC space.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, रेज. अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, बट पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
Hi, I'm Jatin Khimani. I'll be at Investors Carnival this year talking about the art of selling stocks. Watch me on Bloomberg Quint.
Back with countdown right here on Bloomberg Quint. 26 minutes left for the markets to shut shop. Some flashes on your screen. Saudi Arabia is set to be comfortable with a price of $80 a barrel for crude, and well, that alone should have brought a spike in the prices of Brent as well as NYMEX. Bring up the intradays, and actually the chart shows it any which ways that the price of Brent has shot up to about 79.04 as we speak. So some bit of current out there. That this is the last one remains to be seen, but this announcement certainly bringing about a spike. And there is a meeting held which may not be terribly important, but this announcement certainly revving up.
It's interesting because up until now, in November, when the second set of sanctions are imposed on Iran's energy, it's actually going to be Russia and Saudi Arabia they're going to be benefiting from this the most in terms of trying to fill in the gap that Iran leaves behind, and whether or not they can actually match up with the supply is something yet remains to be seen. But some corners of the market actually suggesting that the oil market post the sanctions will be actually held hostage by the likes of Saudi Arabia and Russia. So
not surprised.
Not surprising that they're okay with the $80 per barrel.
Well, let's wait and watch, and that's not a level that should be pleasing if you're an Indian economy watcher. Quite frankly, a trade deficit any which way is on its way northwards. This will only add fuel to fire. For now, crude moving up about 1.25% on that announcement. However, remember Europe too is not all that bad, just that our markets have slipped and slipped quite considerably. We are now at the lowest point of the day, down about 0.8% while Europe is in the green. Sensex about 0.7%, Nifty about 91 odd points. And now it's not the Nifty Bank which is the principal drag, because the Nifty Bank is still down about 1% in a quarter itself. So that's, yes, it is at the lowest point of the day, but other stocks now piling on the losses. So HPCL down 3.5%, Eicher Motors down 3.5%, Indiabulls Housing down 3.5%. So non-financial names are now trading at the lowest point, and that is leading to more pressure. Well, a good time actually to get in, Nikki, to try and figure out if there are some stocks which make to the Fab 4 list of the day at a time when the market is actually getting hammered. Nikki, good afternoon.
Hi Neeraj, I'm going to start off with Gujarat Alkalis and Chemicals there. That stock is up as much as 5% on commissioning the hydrogen peroxide plant at Dahej, and also we are looking at HUL, some gains out there, 3.5% uptake on this counter. An analyst meet which was held there, it said that the demand outlook remains strong for the company. Volume growth at 7 to 8% in Q2. The company has undertaken a price hike in the range of 3 to 4%, which should offset the kind of inflationary pressure. So some great outlook on this counter, which has made the stock perk up. MMTC, that's another one on our list. 4% uptick there on back of volumes, almost 7 times its 20-day average volumes there. So on back of that development, and last but not the least, no price for guessing there, Dena Bank, which is locked in upper limit on account of that merger announcement. Back to you,
Nikki. Thanks for that. Those are the Fab 4 stocks to keep an eye out on. Gurmeet Chadha of Complete Circle Consultants joins us from our studios now. Gurmeet, good afternoon to you. We've been posing this question to almost everybody because it is the most important news at hand right now. But my question to you is, after a 15% cut in a Bank of Baroda, is it a good entry point?
Yeah, see, I would like to wait for the final contours of the amalgamation to come in. I think the share swap ratio, looking by the face of it and the steep correction today, you might be tempted looking at the price. And if you look at the overall package, it's marginally dilutive, both in terms of capitalization, the CASA ratio, also in terms of the NPAs. So it's marginally dilutive, and probably the price these days, markets are very efficient. And you get, so I think the strengths of Vijaya Bank are getting offset by the weakness in Dena Bank, if you look at it in a simple term. So probably wait for some more time before this, because this is a medium term reform which will set in. There will be more amalgamations which will happen. You will have a round 2, round 3 as well. And we are in a market where sometimes wait and watch and not doing too much investment activity is the best activity.
Well, the question is, can somebody do a little bit in the oil marketing companies? Because with the uptick in crude prices, there has been a sharp drop in the HPBP RSC stocks, 4% now down for HPCL. A fundamental view before we get a technical view there, at the lowest point of the day for HPCL. Gurmeet, value zone or difficult to trade them right now?
Neeraj, clearly value zone. At 6 to 8 times forward earnings, I think you can't define value anything better. HPCL also, in particular, since you pointed out, other than having 2 large refineries in Mumbai and Visakhapatnam, also has the largest lube oil, which is a lubricant-based refinery, which serves almost 40% of the requirement. And if you see its 9-quarter gross refining margins normalized, they mirror the benchmark, which is the Singapore GRM. And I think that we've seen that the response so far on the crude spike is not of cutting excise or making the burden on OMC space. We obviously still have to wait, and depends on how much oil prices go up. but a staggered entry definitely warranted. I mean, you can't get something better in terms of valuation. And good business model, good ROC, the weaker marketing margins, but they are compensated by better gross refining margins.
All right, just want to take a technical call on one of our viewer queries, and Amar, I'd like to come to you with this one. They've asked about Deepak Nitrate. The stock over the last 1 year has given a dip of about 36%. Today, just about 1% or so higher in trade. What does one do with this one?
I would say that looking at Deepak Nitrate, the trend definitely remains positive for this stock. So if he has his position, he can definitely hold on to his position, because the stock did correct from 10th of August around 292 levels, and then consolidated around 250 levels. So the stock has now got very strong support around 250, but the stock needs to now breach its earlier high of 290, 92 levels, and currently it's around 260. So he should definitely hold on to his position with a stop loss below 250, and look at booking 50% profits around 290, and if that is breached, then he should definitely hold on to his position.
Apologies, I also wanted to ask you about Deepak Fertilizers, Amar.
Yeah, looking at Deepak Fertilizers, what we are seeing here is that this stock has been on a sell mode, and now it is witnessing some bullish divergence on the weekly chart. So that clearly shows that the stock is showing signs of bottoming out, and it has got strong support around 230 odd levels. So one can look at buying around these levels with a stop loss below 230, but confirmation would be there once the stock consistently trades above 260 levels that the trend has changed.
Sacchitanand, a technical view on the OMCs right now? Anyone that you would trade?
Well, the way HPCL has been performing, in fact, if you look at the September data itself, last year September this particular stock started correcting, and it's almost 1 year and the stock has been corrected more than 50%. If you look at most of the OMCs, on the weekly scale, we are finding evidence that there is a bullish divergence which is getting occurred on the weekly RSI. Most of the price patterns are indicating hammer formations, which are, a first sign of, a resilience on the bullish side. So probably, we may see that this particular decline that we have seen so far could be subsided, and we may see an intermediate bottom, getting shaped up in most of the OMCs. I think, from here on, these are definitely good candidates from a staggered buying perspective. I don't see, most of them declining further. So probably, something like an HPCL could be bought, it could be accumulated from here on. And, the way it has escalated, I think we may see some respite in the next couple of months within this particular counter, within this entire pack, in fact. So I think, definitely, the trend had been more on the negative side for almost a year, but the evidence in hand from the recent data indicates that there could be a bottom into formation. So probably, the sell mode should be, should be avoided, and this particular stock should be utilized to be accumulated on every decline from here on.
Two stocks, NIIT Tech, First Source Solutions, smaller names within the IT pack, but a year-to-date performance has been quite significant. In fact, 102% increment on an NIIT Tech on a YTD basis. First Source Solution gives returns of about 76%. Amar, any trade on these two stocks, or they've already run up?
No, I would say NIIT Tech is purely into a consolidation, and seems that the top has been formed for this stock, and so the risk-reward ratio wouldn't warrant. But yes, the trend for this stock still remains extremely strong. So effectively, meaning is that any correction in the stock towards 1250 levels, 1260 levels, that can be a good level to look at buying NIIT Tech. And on the upside, 1400 and 1425, that's a key level of resistance zone for this particular stock.
Gurmeet, there has been a pullback, and a sharp one at that, in this big sugar rally that we've seen in the last 4 days. So everything from a Balrampur to a Renuka is correcting, and more importantly, Praj Industries too, which has gotten orders. We've seen companies say that they've given orders to Praj, but that too, after rallying a bit, is down about 11%. What do you do here in this pocket?
See, the perfect trading sector, we don't really recommend sugar stocks from a fundamental perspective. I think it was obvious. I think that run up in last week quite substantially. So I think some chips being taken off the table, and I think and I think this sector would look a little more promising. I think we'll probably see more announcements coming to stem the trade and the current account deficit. The ethanol policy is in place, so you could expect some little more announcements here. Coming. So I think once it is down by about, difficult for me to give trading calls, but once it's down a little bit again, probably it could be. So at best a trading bet. Wait for some more correction, then again get in. So that kind of trade.
What about Praj, Gurmeet?
Positive, Neeraj. I think the order is both from a top line and will add substantially to the bottom line. So you can add Praj Industries from a, let's say, and in this market, as I said earlier, anything which has a positive catalyst, either in terms of order or some margin improvement, should be added, and you have to be in this market. You have to have a bit of an arbitrager mindset and see where are the low-hanging fruits available to make money. It's going to be a little difficult over the next 3 to 6 months to just be one side of the desk and take one particular position.
Okay, stay on, gentlemen. Let's cut across. Sanjeev Sanyal speaking on the mega bank merger.
Thanks for joining us on Bloomberg Quint. So the government has announced merger of 3 public sector banks, and the former chief economic advisor and your colleague in the finance ministry has been saying this for very long, that India needs at least 5 to 6 strong public sector banks. So do you agree with this, and do you think there would be any more consolidations in the public sector banking space?
For quite some time we have been talking about consolidation, and you saw some consolidation last year with SBI and its subsidiary banks. So now you're seeing one more of them. It was decided that these 3 banks fit together best. It is important at this juncture, since this question keeps coming up, to note that this is not an attempt to somehow bypass the PCA process or the insolvency and bankruptcy process and so on. This is a commercial decision which is being done on the judgment that these 3 banks fit together well. Whether it's a good decision or bad decision, I'll let you decide. But this is, the thinking is that this is not a alternative to the IBC or PCA process at all. This is a commercial attempt to create a larger entity that has synergies, and these 3 fitted together well because they share many things, including their IT backbone.
You partly answered my second question, but I'll still give it a try. One of these 3 banks comes under RBI's prompt corrective action framework. So can this be understood as a strategy that the government this is the way that the government is trying to bring out all these banks that come under the PCA framework? No.
This is not, this cannot be considered a consistent effort to take PCA banks out by merging them with better, larger institutions. This would not.
So what is in the works for PCA banks? If
so
this
PCA banks, the Reserve Bank is in charge of that process, and they will continue to deal with them the way they do. Now, if it happens to be that in the course of doing these mergers and acquisitions, a few of these entities are involved, so be it. But this is not a case where we are, trying to reduce the shortlist of PCA by somehow, using this as a bypass.
Sir, do you think acquisition of Dena Bank will inflict damage on Vijaya Bank and Bank of Baroda, as this could be seen, the market reacted very negatively and both Vijaya Bank and Bank of Baroda shares tanked. So
clearly the government doesn't think so. Otherwise, clearly the thinking is that these 3 entities merge together well. Markets will obviously take a judgment on them, and that is, in a market-based system, they are free to take the judgment, but only time will tell whether the government's decision was right or not. So let the dust settle a little bit, and let the numbers come through, and I think the DFS Secretary Rajiv Kumar will give the full details in the next few days about exactly how this will go about. So as this comes together, you will get more details.
Okay, so one of the things that reforms that is long awaiting in the public sector banking space is HR reforms. So is there any work parallelly going on that side as well?
So clearly there are many issues that need to be looked at. There is a broader issue which simply merging these banks will not resolve. I mean, inside these banks they may have to do some HR rejigging, but the broader issue of what to do with bank boards and other things remain, and we continue to look at that, and those need to be resolved irrespective.
All right, a quick opinion there on what's happened with the merger of the 3 public sector banks. But let's get back to the markets now. We've got about 10 minutes left to go for market closing. And one particular stock that I'd like to highlight is an HDFC Life. The market's at the lowest point of the day now for the Nifty, given up 100 points and has breached that 11,300 mark. Remember, most of the technical experts view that as a critical breach of support levels. You could see further downside from here on. HDFC Life, on the other hand, the stock's at 410. From a high of 548 in the month of May, the stock has seen a significant depreciation of price. In the last 10 to 12 days of trade itself, it's lost about 10%. Amar, HDFC Life, is it a good entry point? Because at least on the RSI indicator, it is heavily oversold.
I would say that HDFC Standard Life is very close to its very strong crucial support zone. So 390, 400, that's a very strong support zone. So there could be some respite and the stock could witness some pullback. But if you look at the trend, intermediate as well as the short-term trend, that remains extremely bearish. And the intensity is also there. So what it effectively means is that there could be a pullback, but again at higher levels around 425, 430, we could witness selling pressure and the stock could go in for some consolidation.
And an SBI Life?
Yeah, and looking at SBI Life, if I look at SBI Life, what I see here is that this stock is, I would say, is weaker as compared to HDFC Life, and it has breached its crucial support zone. Earlier it was around 630, that was a crucial support zone, so that has been breached and it's trading below that level around 620. So the trend remains down for this stock. I would say that rather let it consolidate before entering in, going long into this stock.
Okay, we've got about 8 minutes left to go for market closing. I want to quickly get some closing strategies from both our technical experts. Sacchitanand, let's start with you.
Well, the one which we have already discussed, Yes Bank, this looks really promising. In fact, the way it has been consolidating, 325, 320 has been a decent base for the stock. So I think a stop loss can be placed somewhere close to 321 and long positions can be initiated on a closing basis. We're expecting that this particular move or the bounce back can extend right up to say 338, 340 zone. So I think from a bullish perspective, Yes Bank, from a BTSA perspective, Yes Bank looks promising.
Okay, and Amar, what about you? Your top idea?
I would say one can look at Hindustan Unilever because this is one stock which has corrected and has taken very strong support, extremely strong on the long-term charts, and oversold on the weekly charts, as well as taking very strong on the strong support on the daily charts. So this is one stock one can definitely look at buying. So any pullback towards 1655 levels can be used as a buying opportunity with a stop loss of 1614 and a target of 1738 in the short term.
Gurmeet, we took the chart opinion there. Some of these quality names, HDFC Life, HDFC AMC, which is now down 4% and is at trading at 1536. This would be the lowest level that the stock has traded at since listing. What do you do? And these are not two. I mean, Reliance Nippon Asset Management is at 210 or thereabouts. There is significant value out there too. What do you do with some of these names?
Neeraj, incrementally add. HDFC Life, it's a leader in the protection business amongst the private players. It's also been one of the first movers in the credit protect segment. I think what it probably witnessed was, exit of Amitabh Chaudhary, and also HDFC Bank now becoming an open architecture. So earlier there was, one bank assurance product and 60% volumes came from the bank. So that's why we've seen the stock under, some pressure. But the ROEV, which is return on embedded value on which insurance companies are measured, I think both SBI Life and HDFC Life are above 21-22%. And we are a young nation, working nation. We have no social security net, or very little social security net, and everybody wants to retire early these days. Early financial independence. I think both AMCs and life insurance, to me, are huge multi-baggers over a long period. So any correction in them, including asset management names, I think are great entry points. Only thing is the market is such where we should not rush with your, allocation. Just stagger it a little bit. There's no harm in missing out on some upside, but just stagger it over a period of time.
Just stagger it out, and well, that might not be an imprudent piece of advice. Okay, Gurmeet, just before we thank you, one idea that you would be comfortable adding at the current levels?
SBI, Dheeraj, I think, I've been a little positive on corporate lenders. I think there is a perception versus reality issue with some of the PSU banks. If you see the banks outside PCA haven't lost any market share. And I was doing some number crunching for SBI. The retail loan market share on home loans now, SBI is 18% of the overall market. On auto loan, it's almost about 16%. On digital transactions, it's contributed 17% by volume. So I think there is a silent changeover happening where the banks are getting, the player like SBI is getting realigned with moving towards retail advances. The slippages have been much lower incrementally on the NPAs, and the valuations give you a lot of comfort. One-time book value is very good. So SBI, one idea if you want to add at these levels.
All right, we've got about 3.5 minutes left to go on trade. Looks like we're going to have a tepid close to the market. In fact, the lowest point of the day for the indices, closer to 1% given up on both the major indices, and even the bank Nifty reeling under a lot of pressure. But what are the moving parts there? What's caused this big dip that come in on the indices? Neeraj, take it away.
Thanks, Devina, for that. So yeah, you summed it up. This is how the large caps have done. The Nifty Bank closing in at the lowest point of the day. And now we are sub 11,300. This was not something that too many people anticipated at those 11,700, 750 odd levels. The mid caps and the small caps, which are resilient for most part of the trading day today, but correcting very swiftly. The small cap space actually dipping quite strongly in the last, 1 hour, 1.5 hours of trade, 2% lower for the Nifty small cap index. The BSE 500 too down about 1%. So broader markets have corrected. Nifty Bank has corrected. The market breadth would be adverse in the session today. Let me talk about the large caps though, Devina. I'll bring you up to speed with what's happening across the broader end. HUL holding out 3.5% higher. I don't think this is just defensive buying. There was some upticks today because of the analyst meet and the positive commentary thereof. There's some strength in Yes Bank today, and ITC giving company to HUL. Titan was in the list of gainers, but it's quietly escaped from there. Wipro about 1% higher, GAIL about 0.5% higher, but the gainers are few and far in between. Look at the losers though. Financials right up there. SBI, Indiabulls Housing Finance, Axis Bank amongst the stocks which have corrected. BP, HP, IOC have corrected after the crude uptick, and this is actually a phenomenon of the last 1 hour of trade. And some losses for Z as well. Lupin amongst the stocks that has corrected, and UPL bringing up the list. So across the board losses, but OMCs and financials really ruling the roost when it comes to the top losers on the index. Actually, I might add autos too out there. What about broader markets, Devina? The small caps took a big beating in the last 1.5 hours.
Well, actually, it was a clear slide right from the second half of the trading session. You saw much of them losing steam, and led by obviously some of the PSU banks, which quite contrary to what the likes of a Dena Bank did or a UCO Bank, they actually started to slip quite badly. So, likes of a Canada Bank, or for that matter, an Indian Bank, all gave up. Dena Bank was up, UCO Bank was up about 6.5%, but a Can Bank there, a steep cut of about closer to 8%. Indian Bank, another 9% given back. Bank of Baroda, so one of the strongest and sharpest intraday cuts that we've seen in quite some time. In fact, over a decade, I believe. The stock's down about 17%, closing in on that 112 rupee mark. You've got the likes of Bajaj Hindustan. That's a stock that you need to watch out for. A big move in trade today from the sugar pack, 9.8% higher, but that's not what's happening in some of the other sugar names. So while a Bajaj Hindustan is actually up to 10%, a Balrampur Chini is actually given up some of the gains that we've seen it accumulate over the last few days. Sri Renuka has given up gains, so Balrampur Chini is down 10%. It just came out of the F&O ban and it's been battered in today's session. Sri Lanka Sugars, which up until now was enjoying that ride, seems to have given up another 10% in today's session. Aside from that, you have another few names to watch out for. Jyoti Labs, MMTC, these are two names that have been trading with a positive bias towards the end of trade today. So closer to about 4.5% for MMTC, Jyoti Labs with a similar amount. Biocon from the pharma pack doing well. And two other names which we've lost out in trade today. Hathway, which seems to be under pressure. That counter down 7.5%, and IL&FS Transport seeing pressure points as well. So sell-off there down about 6.5%. But for the indices, big dip in today's session. Did see that brief moment at the start of the trading session when it sort of buoyed itself, but then again the pressure building up, sellers in full force bringing the index down.
Yeah, for sure. And with the advanced decline ratio would be interesting to see in the quantum of increase in the reds. I mean, look at that yawning gap. It started doing midway through trade, as you said, the second half, but this last 1.5 hours, an exponential jump in the number of declines to the number of advances. Well, 1:3 in favor of the declines. That's not a very pretty picture, Devina.
Yeah, most definitely. And it's interesting to see what kind of volumes this comes on the back of. So, we've been seeing big numbers on days where markets have sold off. Yesterday, though, we had a smaller figure for the NSE cash. It was sub 30,000. Today, it's crossed 31,500. But the futures and options figure is something to take note of. So that's burgeoned quite a bit in today's session. And even on the BSE cash, we're pretty much on tab in terms of the average figure of about 3,000 odd crores.
Yeah, and this number would remain high tomorrow because of the weekly options expiry as well. Just the contributors list and let's see what's happening here. Financials all the way. Well, maybe Reliance too, but financials all the way. And actually Reliance was helping the index hold out the index at about 2 and it slipped into the red. So financials negating all the gains that put up by the consumption names, I guess.
Yeah, ITC, HUL, so those valuations which sort of made them slightly more attractive, with people talking about being slightly elevated. They got an opportunity to probably enter. And these are more safer haven stocks in a volatile market. So when you have high beta names giving off, you have safer names like an HUL, ITC, even for that matter, ONGC, where people want to plug in their money.
Yep, certainly seems like that. So another tough day of trade and the selling continues. Let's get in some final opinion from our experts. And Amar, to you first, how does this place us for the next few days? What kind of downside would you observe, or would you believe for the week ahead?
I would say that overall, as I said earlier also, that we are witnessing some sell-off, and the sell-off is likely to intensify. So somewhere on the downside for Nifty, I would say 11,200. That's a very crucial zone of support for Nifty, because if that is taken out, then we are headed lower towards 11,000, 11,050 levels as well. So that is going to be the first point of support, major support for Nifty. Whereas on the downside, on the upside, I would say anywhere around 11,430, 470. That's a level of resistance. So on the upside, again, we'll witness selling pressure coming in Nifty, and the stock could consolidate. If the stock is able to sustain above the 11,200 mark, then we could witness some consolidation. But overall, now what we are witnessing is, even on the weekly charts, we are witnessing that the earlier bullish momentum, that's on the decline, and there is some pressure being seen there as well.
Okay, Sacchitanand, your thoughts?
Well, our focus is more on the Nifty Bank, and this is what we have been discussing. If you look at the entire data from an intraday perspective, if you look at the 60-minute time frame, you will clearly see that from the levels of around 27,100, which was established, somewhere last week, the index has been sliding down. But if you look at the RSI value from that particular point itself, the RSI value has moved up from 14 to 28 right now, and though the price action is on the lower side. So this is a clear-cut indication that there is some divergence in the price action, and that's why we are, refraining from creating any fresh short positions as of now. Though the broader trend for the market remains negative, but there is substantial evidence saying that fresh shorts should be avoided here, and probably wait wait for a bounce back to to be witnessed, and then probably fresh short positions can be initiated. So as of now, we are refraining from creating any fresh short positions. Probably we may see a bounce back to say 26,800, 880 is something that we are expecting, and then probably fresh short positions or short commitments can be reinitiated. But as of now, I think the bullish divergence is an indication that one should avoid fresh short positions and probably wait for a bounce back to create fresh positions on the short side.
All right, gentlemen, we'll leave it at that. Sacchitanand as well as Amar, appreciate you taking out the time and addressing those queries for us. Gurmeet, before we let you go, just a closing thought from you as well.
As I said, we have a more cautious wait and watch approach because there are too many moving parts, whether it's oil, it's dollar, trade wars. I think cash will come extremely handy. There are some interesting opportunities which are emerging. On equity, we are saying, go into the value pockets. Don't necessarily see only price corrections. See the value pockets where, the underlying fundamentals are strong. So IT looks good. Incrementally, you can keep adding, again, with a biasness to large cap ITs. Some of the corporate lenders look good as they transition and a higher share of retail loans and advances pick up. We are also, incrementally positive on few consumption themes. We've discussed very niche consumption themes like pressure cookers with, LPG connections coming, something like an IGL gas, a large GST movements from unorganized to organized. And, stay light, keep waiting for opportunities. Next 3 months, we don't see a lot of index movement really happening. So when you get good entry points like HDFC Bank below 2,000, or some of the other good names, just keep adding and utilizing that cash.
Okay, gentlemen, all of you, thank you so much for joining us today and giving us your perspectives. Really appreciate your time. Gurmeet, thanks for joining in as well Sacchitanand as well as Amar. Well, another tough day for the markets. Hopefully, the next few days won't be as bad. It's a truncated week, but for watching this leg of Countdown from Devina and me and the team that put this show together, thanks so much for watching. Bye.